Hi, I'm Lyle, and today I would like to persuade Dell Incorporated to change its pricing strategy so that it can achieve profit growth in the future. Although Dell has been reporting revenue growth of 11% in quarterly earnings, net income fell by 4.8% due partly to price reductions aimed at stimulating sales. Dell continuously attempts to add value to its customers. The best option for adding value must come from the product rather than the pricing strategy, as competitors are producing computers at increasingly lower prices. As competing computer companies are enabling themselves to lower costs, Dell's pricing strategy of continuously lowering prices from their competition has caused the company to lose profits. In order to maintain profits, Dell needs to add value to the product without dropping price. Alright, the problem Dell Incorporated is facing comes down to it making its prices too low to gain profits. Dell's company model attracts customers because it saves costs. Since other companies are able to offer computers at low cost, Dell's price-conscious customer base is now threatened. It is harder to maintain a strong cost advantage over rivals currently. As competition follows suit with Dell's actions, they have made standard pricing exceptionally lower across the market. It is now harder to get gains on a $500 computer than one that costs $1,500. Dell continues to lower prices in order to keep customers and increase revenue. But the pricing is too low, which creates a decline in profits. Dell is blinded by its goal of increasing revenues, when in reality, profits are way more important. The day of Dell's growth to 2 or 3 times the rate of the market are gone forever, Richard Gardner of Citigroup claims. But Dell, when confronted about these issues, has said, "We, as a company, would like to continue to push prices to be lower," Dell said, "so that we can provide value for our customers in the future. To stay ahead in the computer market, value for customers is needed. But adding value through reduced pricing will continue to lower profits." The alternatives that Dell could take to lowering or adding value could be to spend more on research and development to create better products than competitors. This could cause a greater attraction to the product so that they could keep products or prices high and still have the same amount of sales. Also, they could add marketing to target markets with potential, such as the student segment, which only accounts for 5% of the company's market share, as Dell focuses mostly on businesses and government institutions. By changing to a bigger market, they could bring profits in from a different segment. Additionally, they could focus on business products rather than just PCs, sacrificing market share and growth rate for additional profits. Any of the following alternatives could eventually create profit increases. The most desirable course of action is to use research and development to create better products so that the company can stay above the competition at higher prices. This change could prove to keep Dell as a leader in the PC market with growing profits. Dell Incorporated must invest in research and development in order to provide products with more value than their competitors. By lowering costs, Dell has created revenue reports that mislead the company, when in reality profits are dropping. Dell's competition has lowered pricing over the years, and as a result, Dell continues to take the cost advantage approach to gaining revenues. Unfortunately, the prices have dropped to a point that decreases the chance of profit gain in the future. In order to gain profits, Dell must create a product that has a value based on quality rather than its traditional pricing structure. I hope Dell can change their future pricing model so that they can create value at a higher price so that they can achieve profits and revenues equally together for a successful business in the future. Thank you.